The S&P resumed steady climb. Hi, I'm Marcus. Welcome to the weekly market wrap-up for April 8 to 12, 2013. On Monday, stocks spent the bulk of Monday's session in negative territory before afternoon buying lifted the major averages out of the red. As a result, the S&P 500 settled higher by 0.6%. Although stocks finished with gains, leadership was mixed, suggesting a certain level of indecision was present among market participants. Both consumer sectors ended ahead of the broader market, with the defensively oriented staples in the lead. Coca-Cola rose 2% and Philip Morris advanced 1.9%. On Tuesday, equities settled just off their best levels of the session, with the S&P gaining 0.4%. After opening on a higher note, stocks alternated between gains and losses until afternoon action sent the major indices to their highs. Steelmakers rallied across the board as the market vector steel ETF surged 3.4% to records, its second largest one-day advance of the year. Wednesday saw the S&P 500 rose 1.2% as technology, healthcare, and industrials outperformed the broader market. Notably, the Dow Jones Transportation Average stood out with a gain of 1.8%. On the downside, home builders set out the broad market rally as Taylor Morrison Home Corporation made its debut as a publicly traded company. On Thursday, S&P 500 rose 0.4%, but technology stocks did not participate in the advance. The sector was under pressure after the International Data Corporation indicated first quarter PEC shipments plunged 14%. This marked the largest decline on record since IDC began tracking shipments in 1994 and pressured major tech names. Hewlett-Packard fell 6.5%, while Intel and Microsoft settled with respective losses of 2% and 4.4%. The S&P 500 index finished last week up 2% despite breaking a 4-day winning streak on Friday. Poor economic news sends equities sharply lower Friday morning, but they bounced off lows midday to only finish slightly lower. This price action confirms again that any dip has provided a buying opportunity. Retail sales and the consumer sentiment show weaker numbers, but the Fed backstop and buyers from overseas have continued to propel U.S. stock markets. Despite the downturn on Friday, most major indices finished up nearly 2% for the week and are once again making all new-time highs. The Dow Industrials finished the week just below its historic highs as investors search for yield in blue chips names that comprise the index. The tech-heavy Nasdaq saw 2.8% this past week, but is still the laggard of the major indices for the year. Gold prices fell over 6% last week and are off more than 20% from record highs in 2011. This puts the precious metal in bear market territory for the first time ever after 12 years of gain. Oil also fell sharply this week, which should help gas prices fall in the near term. Financial giants Wells Fargo and JP Morgan Chase both reported mixed earnings on Friday morning. While both bellwethers soundly beat estimates on an earnings per share basis, revenue misses show weaker fundamental growth. Earnings share wraps up this week as a third of the Dow Industrials and 70 of the S&P 500 companies report quarterly results. Investors will mine these reports for clues about the continued health of corporate America. The CBOE Volatility Index WIX finished the week down 13% as stocks were strong until Friday. The fear gauge is showing that investor demand for riskier assets is growing and downside protection is cheap on a historical basis. Despite the rally in equities, Treasury demand was also strong this week as investors are playing both the risk-on and risk-off trades with equal demand. We see this correlation falling at some point as money historically flows from one asset to the other. News out of the Eurozone and emerging markets continues to disappoint and the markets remain under pressure. News that Cyprus will need more aid, whether Slovenia will be like Cyprus, and grumblings from Italy to Portugal have markets in Europe on edge. Global markets are also on high alert for news from North Korea as their rhetoric remains negative. Any further deterioration in any of these hotspots may be a downside catalyst for stocks. There is not much market-moving economic data due out this upcoming week. Investors will focus on reports on consumer prices, the Beige Book, and the weekly jobless claims. There is also plenty of Fed speak this week as at least 7 Fed governors also slated to give remarks on the economy and policy. The main focus this week will be on earnings and could provide near-term direction for the market. This is the weekly market wrap-up for April 8 to 12, 2013. This is Marcus Khoo. See you next week. Bye for now.